Okay, class, good evening. Good afternoon, everyone. You're welcome to another class. Today, the mission is to look at IAS 38 and also solve questions on it. Last week, we focused on IAS 16 on PP. We looked at the definitions. We looked at the recognition criteria. We looked at measurement bases, both initial measurements and also subsequent measurements. We learned a lot around the component of costs. We learned about depreciation, straight line method, reducing balance method, how to calculate it. We saw the key difference between straight line and reducing balance. We then learned about evaluation model. Now, when you revalue, we usually have evaluation surplus or deficit. We looked at the double entries, looked at examples and all that. Then disposal, how to calculate gain or loss on disposal, disclosure requirements and all that. And we solved some corrections later in the evening. So we did a lot. And I gave you these practice questions as assignments and other assignments, at least as far as I can remember. A few people, not just few people, two people submitted. Two, Shidima and Fasheito. Though Shidima only submitted one, she did not attempt these other ones. You have to attempt it. Fasheito, please remind me to send you the solution to those ones that you shared. I've looked at it. He's not even in class yet, but he attempted all of it. So the rest of you, please go and attempt it. It makes you practice, makes you understand all of these things. Now, there are some standards that are very similar to one another. And I'm really tempted to want to take them out. Like, I want to quickly teach you those standards so that I know that I'm done with them because they are so similar. Another one that is similar is IAS 38 on intangible assets. And there is IAS 36 on impairment of assets. And then I have IFRS 16 on leases. I also have apart from leases, I have financial assets on IFRS 9 as well. I think all of those. Then there is IAS 40 on investment property. I always like to put all of those ones together in a bucket. But this is already the second weekend in February. And my plan was to move into group account, so which I have not even started. So I mean, I just find it, I will just see what I can do, but I need to take out that group account as early as possible, especially just so that the professional student also can benefit from the introductory parts. Because the group account I will be teaching you guys at FR is like the introductory part to those doing SBR. And there are more advanced ones that they would ask in their exam. So hopefully, wherever we finish today, we'll just have to focus our effort on group account. Let's take it out, maybe 5 classes or max 6 classes. We know that we are done with it. Okay, please go and solve those questions. And of course, we'll solve more past questions together as we proceed. Now, today we are looking at intangible assets. Intangible assets. If you remember vividly what property, plant, and equipment is, you would remember that it's defined as any tangible item. Okay, this is the opposite of that. This one is intangible, and the name is so straightforward. The name makes it very clear what we want to deal with here. We want to deal with intangible assets, assets that you cannot see, assets that you cannot touch, that the closest you can come to them is probably a paper, like a contract. You can't see, neither can you touch them. So, do they make money for you? Yes. If they make money for you, that's exactly what makes them an asset. So, that's the class of assets we are looking at today, and it's governed by IAS 38. So, basically, today, I would start with definition of that asset. I would, of course, from that definition, I'll give you some examples just to put proper context to what we want to look at. Then I would look at how you recognize this asset, the recognition criteria for them. Then I would look at how do you measure them, then the recognition, then disclosure, then correction. So basically, this is what we want to look at. The earlier we finish all this, the earlier we'll leave this afternoon. As soon as we're done, we would go because the mission is to start and finish this today. So now, aside this, we would also want to, so let's look at the definition first. I yesterday defined intangible assets. Said intangible assets is an identifiable non-monetary assets without physical substance. That's how it's defined in IAS 38. Identifiable non-monetary assets without physical substance. So the one that I think is very clear from this definition is that is without physical substance. I wonder why they why they introduce this to identifiable non-monetary. But at least even without explaining anything, you know that they are without physical substance. It's not something you can touch nor see. Then the one that is not clear, which is identifiable. So what does that mean? This means that the asset is separable or arise from contractual rights. Okay. And when we say separable, even from the word, it means that it it can be separated, it can be sold or leased or transferred separately from other assets or the entity itself. So it can be sold separately. It's distinguishable. It's separate. That's what makes it separable. And typical examples of intangible assets that are separable You have examples like a license or even a patent or even a software. They are separable. You can separate them from the company itself or arise from contractual rights. So typically, this has explains what it means. Is an asset that was birthed through a contract, and examples of such assets. Basically, we have franchise. Okay, and when we say franchise, we're talking about a right that you have to use another company's name. That's a franchise. So if I am in Nigeria and I want to start selling Toyota products, I can enter into a contract with Toyota that they should make me an authorized dealer. Or I simply buy, not just having a franchise might even be, it's similar to being an authorized dealer, right? It's similar to it, but it's even much more advanced in a way that nobody will distinguish me and Toyota. When you're an authorized dealer, it means that you would buy product from Toyota and you can sell under any name. Of course, you can sell the Toyota car under your own company name, meaning you have your name, whatever your name is, then you're selling Toyota cars. But when it's a franchise, it looks as if it's Toyota that is selling it because you'll be carrying Toyota name. So it means you have bought that name, Toyota itself. So it's a franchise. So it becomes an asset to you, but it's not separable. You cannot say you want to sell it to another person as well. No, you cannot. So that is why an intangible asset is identifiable. And being identifiable means that it's either is separable, meaning an asset that you can sell, lease, transfer separately from other assets, or is arising from contractual rights. You bought it as a result of a contract. So you cannot transfer, you don't have the right to transfer it to another person. Or there is masthead or even publishing titles. These ones are not arising from contractual right, but are transferable. You can decide to transfer your publishing title. You can decide to transfer your masthead. So there are numerous examples of intangible assets as it were. Okay, so let me pause a little bit and interact with you guys. So David, my line is breaking, right? Is that applicable to everyone? Um,
No, it's clear.
No, it's clear, yeah. Maybe
It's
the
clear
sound is
here
breaking.
as well.
okay, great. Now, is there anybody in this class that can enlighten us? What does masthead means? Masthead. Masthead. What does it mean? Just for the purpose of discussion. No doubt it is an intangible asset, but yeah, masthead. Anyone? Okay. So masthead is synonymous to or is attributable to newspaper companies. Okay, newspaper companies. Um, like punch, for example, and all of that. So a masthead would be maybe they have a particular headline that is popular. They have a headline that somebody usually writes a story under, maybe every week or every month. That's a masthead, and it has now become popular that people are always looking forward to it. So when it comes to publishing title is the brand name itself, like Punch, like Guardian, like Business Day. That's publishing title. Okay. And for other companies, they call that brand name. Brand name. Okay. I mean, there is also goodwill as well. There are a lot of examples of intangible assets, as it were. That's one. Two is non-monetary assets. Non-monetary assets. So an intangible asset is also a non-monetary asset. And what this means, when we say non-monetary assets, this means that the benefits from the item or the asset is variable. Is variable. Okay? Is variable in the sense that we cannot determine with certainty how much we're going to make from that asset. That's what makes it variable. And this is why items like trade receivables, for example, trade receivables, items like investments, assets like bank are not intangible assets. Are not intangible assets, even though they have no physical substance. Okay? And that's because these assets are monetary assets, which means that the benefit from them are fixed. So in the sense that asset like trade receivables, investment banks, it's not something you can see. You can trade when you have trade receivables. Yes, they will describe a person, but the asset itself, you can't see it. The closest you can come to it is a paper, a contract, an invoice. Investment, you can't see it. It's not something that has physical substance. But you cannot say those are intangible assets. And the reason is that they are monetary. Those are monetary assets. They are monetary assets. The benefit from them is fixed. Your receivables, you know how much you're expecting from your receivables. Your investments, you know how much you're expecting from it. Your bank, you know how much you're getting. That is different from non-monetary. You don't know. It depends on how well you use that asset. You can get a lot and you can get nothing, depending on your usage of that asset in question. So that's a major difference. So non-monetary asset is a major feature of an intangible asset. So that is the definition and examples of intangible assets. There are much more examples. So let's go to the second item here. The second item is recognition of intangible assets. So, how should I do this? So let me write it for you. Um, intangible asset is recognized. Intangible assets is recognized if it meets the following criteria. Number one, it is probable that future economic benefits associated with the assets will flow to the entity. Number two, it must have a cost that can be measured reliably. So these are the two recognition criteria for intangible asset. And if you remember, you will see that this is exactly the same recognition criteria for PPE. It's the same. So good for you. As soon as you know that of PPE, you definitely know that of intangible asset. It's the same. So I will not go to unnecessary details. Almost the same thing I've mentioned for PP in terms of recognition. It applies the same for intangible assets. Now, when it comes to recognition, we need to also then move straight to measurements. Okay. But in terms of recognition, there are different categories. There are different categories of intangible assets. Let me put it that way, right? They might not put it like that in the exams. They might ask them separately in their own right. But these categories really determines recognition of an intangible asset. So number one is a purchased intangible assets. So when you have a purchased intangible assets, these are assets that you actually bought, the intangible asset that you acquired yourself, that you paid for, right? So these assets are recognized. They are recognized. They are recognized as soon as they meet the recognition criteria as we mentioned up there. So you recognize them in the books immediately. So any of these that I've mentioned, as much as you are paying for it, then fine, you can go ahead and put it in your books. Number two is internally generated intangible assets. Internally generated intangible assets. So these assets are not recognized in the books. Okay. These assets are not recognized in the books. Let me complete it. Except or unless they are acquired in a business combination. Okay. Unless they are acquired in a business combination. So, and examples of such assets are, you have brand name. So brand name are not recognized in the books as an intangible asset, even though it is an asset, but it can never be recognized in the books, except or unless it is acquired in a business combination. And you know what I mean by being acquired in a business combination? It means that you bought another company, you are buying another company, and you are now paying for the brand name. So it means that we know how much we are paying in that wise. We know how much you're paying. That is why we can recognize it in our books. We know how much we are paying. So brand name are not recognized in the books unless they're acquired in a business combination. That's where you see us putting it in our books. Of course, we have customer lists. Customer lists are not also recognized in the books because they are internally generated. They are internally generated. I asked you masthead the other time and also ask you publishing titles. These are names that people have worked out for to obtain. You cannot put it in the books unless they are acquired in a business combination, right? So they can ask you this in the exam, that list examples of intangible assets that are not recognized in the books. And they will tell us in what situation can it be recognized in the books. So we don't recognize them. We only put them in the books when we acquire it in a business combination. You bought another company, and the company, part of what the company is valuing for you, okay? In that wise, like I mentioned earlier, it means that now there is a value for it. Now there is a value for it. So, and you see, the reason why ordinarily, the reason why they are not recognized in the books is because we cannot reliably measure the the assets, the cost of the assets. We cannot reliably measure the cost of the assets. So we cannot say, these are our brand name, or this is how much I spent to build this name. Or these are our customer list, or this is how much I spent to build this name. Or these are I mean, you cannot. Okay, so because of that, we don't put it in the books. Not only that, and the future benefits from the assets cannot be measured reliably. So both the costs, we cannot say this is how much we spent. The benefits, we cannot say this is how much we are benefiting from this particular. We cannot. I mean, you cannot separate it from the business, but that's the business itself. You cannot say this is how much benefit we are getting from this name, having this name, except you want to say the whole of our sales. And you cannot attribute that to your just brand name alone. Before people knew you were selling, right? So, and that is why, it's because of this reason, right? Because of this reason, that's why in a business combination, we now know the cost. We now know the cost, right? We can now measure the cost because like we are now paying for it. So we can know what we paid for. Somebody is paying for the brand name. Somebody is paying for the customer list. Now we have the value. Okay. So basically, that is an internally generated intangible asset. Another one is research and development. You see, for research and development, they are also internally generated intangible assets, right? These are also internally generated intangible assets. Okay. However, they are they are project specific in the sense that it's something we actually worked on specifically. And examples are like maybe a company's website, your website, for example, now, or you're doing a software development in-house. You're doing a software development in-house, or any project that you're working on internally, or you're developing an app within your organization. So these are internally generated intangible. These are research and development. So, and in such case, because they are project specific, we can then distinguish the money we spend into research and development. Okay. And in this case, right, in this case, research costs, research costs should be expensed. So when you can distinguish project costs into research and development, all the research costs, you expense them. And the good thing is that nobody will ask you to start defining research. But apparently, research sounds more like you're still making findings, you're still trying to understand the project, you're still at the very beginning stage, you're doing preparatory work, you're not really started designing, development, and what have you. And the future of such an item is not certain. So all of those costs are usually expensed, right? However, at development phase, so development costs are capitalized if it meets the following criterias. If it meets the following criterias. So I would just so that you can easily cram it for exam. Those criteria, I'll break it down into pi rates, PRIRACE, right? The first one is probable inflow of economic benefits. So if it is probable that the asset can now generate money, then fine. Then also you have intention to complete, then fantastic. Also, resources are available to complete the project. Also, you have the ability to come, not just you want to, you have the intention to, you have the ability to complete and use and sell the assets. Also, it has to be technologically feasible, technologically feasible to complete. And finally, the expenses incurred on the project can be measured reliably. So we can reliably measure the expense that we are incurring. So this is 6. You need to know it for your exam. They can ask it as 3 marks question. So as soon as all, so we really want all to be met. As soon as all are met, then you can go ahead and recognize the development costs as an intangible asset. Now, note that the indicator that the above criteria has been met is usually the existence of board approval and regulatory approval. So depending on the type of intangible assets or projects you are developing, this is what we look out for in most scenario questions that they give you guys in the exam. We look out for board approval. We look out for regulatory approval. So at the point where the board has approved that this thing is now viable, or the regulator has approved the project or the assets, then it's from that date that we can say, okay, this asset is now feasible. Then we can start recognizing it as an asset. So that's what you should look out for in case they give you a scenario question where you need to determine whether the asset has been developed, whether the asset should be capitalized or not. And for SBR students, right, here, areas around professional judgment is where you should look out for. I can ask you around that um, you are required to exercise professional judgment, and also areas around ethics, because you would find some entities wanting to capitalize these assets because they will look at, we have spent so much money, because development and research, it requires huge outlay that some companies will just go ahead and capitalize it. So for those of you doing like a course like case study, for example, I mean, these are areas where you can talk around ethics that are no, it's not, does not reflect professional competence and due care. You're going to mislead the user. It's not objective. You just hammer on those ones and speak around that. So they can ask it in different ways in the exam, aside to just asking you to list or asking you to identify whether the asset should be capitalized or not. Okay, so that's research and development. So these are basically the categories of assets, of intangible assets that we have, and how we'll ultimately recognize them in our books. For purchase, very straightforward. They are recognized as soon as you buy them. Internally generated intangible assets, very straightforward. They are not recognized in the books unless they are acquired in a business combination. And I told you why we cannot recognize them, because we cannot measure them reliably. And also, the future benefit from the asset can not also be measured reliably. And there is another one called research and development. This one are also internally generated, but they are project specific, like you're developing a website for your company, or you're doing a software internally, or you're developing an app, or you're developing, like you're working on a pharmaceutical project, something like that. So internally, you're working on a project. So, and of course, it has to be an intangible item. So in that case, if you can separate the cost we are spending into research and development, the cost at the research phase expensed, at the development phase, they are capitalized if they meet the following criteria that I mnemonized as pi rates for you to easily remember it in the exam. And what shows that the above indicators are present, that the above criteria have been met, is either there is a board approval or regulatory approval. This shows that, yeah, we have met these criteria and we should capitalize the development cost. Now, the next one is measurements. Now, when you have now recognized these assets, depending on how you acquire it, you then need to measure it. This is, like I've told you before, there is initial measurement. It's the same thing as what you learned under PP. Okay, is initial measurement is at costs. Okay, so this is at costs, and the component of this costs is the same as that of PP, the same. That is purchase price, import duties, non-refundable purchase taxes, less trade discounts and rebates, directly attributable cost. All of that, the same. Also, there is subsequent measurements. This is also the same. This is also the same as PP. So who can remind me? How do we subsequently measure items? If I say it's the same as PP, so what are they? What are they?
Cost model and financial model.
Thank you very much. Cost model and evaluation model. And what's cost model?
Cost less accumulated depreciation or accumulated impairment loss.
Thank you, Shidera. Accumulated depreciation less accumulated impairment losses. Okay. What about evaluation model? Shidera. What's evaluation model? So is it that you want to go and quickly open your note or what?
No. Revalue the amounts less accumulated depreciation and accumulated impairment.
After you have checked your note, you think I didn't see you. Less subsequent accumulated depreciation, less accumulated impairment losses. Okay, it's the same now. So, you see, for intangible assets, revaluation model can only be used where the assets has an active market where pricing information are publicly available. This is so important, and a lot of us will just forget, but it's important. And you see, this is why most intangible assets are measured at cost model. Because most of them does not have an active market. There is no active market for them. Is it software? Is it websites? Is it patents? Is it license? It's in practice, you will use cost model. And I can ask, especially those guys writing SBL, they can ask you around this paragraph I just gave to you. Is very important. If there is no active market for that asset, don't use, you cannot, not even don't use, you cannot use evaluation model. Don't even go there. Don't go there. Please skip this paragraph. It's important you actually remember it. Now, for intangible assets, see, most intangible assets have an indefinite useful life. This means that we cannot reasonably determine the useful life of the assets. Okay, we cannot, we don't know when it will end. Not that it will not end. We know it will end one day, but you don't know. Just like you have an app, or you have a website, or you have a brand name. Not that it will end. It will end. But when? We don't know. We don't know when the company will misbehave, that everybody will hate the company and all the names that they think they have is gone overnight. So that's what we mean by indefinite. You know that indefinite is not the same thing as infinite. You know, they are different. So what IAS today deals with is indefinite useful life. We don't have we don't have an infinite useful life in reporting or in any standard, because infinite means it will not end. Infinite, that one, it's something that cannot end. Infinite life, it will not end. But indefinite, it will end, but we don't know when. We cannot reasonably determine it. So because of that, so as a result, an intangible asset with an indefinite useful life cannot be amortized. You see, amortization is the term that replaces depreciation for PPE. So depreciation we use for PPE. Depreciation we use for PPE, but amortization we use for intangible assets. That's what we use for. The same meaning, the same thing, the same principle, everything the same, but they decided to call it amortization in this area. So you cannot amortize an intangible asset with an indefinite useful life, but they must be tested for impairment annually. So when you see an asset, an intangible asset to be specific, with an indefinite useful life, you must test it for impairment every year. You have to test it for impairment every year. Every year you need to test it for impairment. Okay? So that's pretty it around measurement of intangible assets. Okay? So that's it for intangible asset, because disclosures requirements. So this is the same as PP. If you go and check, it's the same. The recognition, this is the same as PP. Okay, so let's just have few discussions before we solve questions, right? Let's have few discussions around websites, around staff training costs, what again? Around cryptocurrency like Bitcoin, cryptocurrency, um, a footballer. I'm just trying to look for some practical issues that we can talk about. Okay, I think this is it. So let's have website costs. Now, can this be capitalized as an intangible asset? Okay, can this be capitalized as an intangible asset? Can anyone speak to this? So I won't just jump and just tell you the answer like that. Can anyone speak to this? A company built a website. So should it be capitalized?
No.
No. Okay. So that means we are going to expense it.
Yes, sir.
Okay, good. So I won't say you are wrong, eh? Neither are you right. So the way to answer this, just so that you pick points in the exam, is to say that intangible assets are recognized if it meets those two criteria: probable future economic benefit and has a cost that can be measured reliably. Then you capitalize it. However, you see, in real life, the reality is this: most people just develop websites just to, it's just for marketing. It's just to show what they do, their phone numbers, and all of that. The cost for that should be expensed. So in that wise, you're correct. So it depends on the purpose of the website. So if it is developed to show the company's core mission and vision, and also to list the owners of the company, which is what most websites do. It's not really doing much. However, if the website is directly related to the revenue generating activities of the entity, then the website costs should be capitalized, while the annual renewal of hosting fees and related expenses, related maintenance expenses should be expensed. So you will find a lot of company, they will say website, they will quickly put it as an intangible asset. It's when we get to the field, we say, let's even see this website. You see, is this the website we are capitalizing? We'll pass an audit journal, we expense everything for them. Put it as in P&L. You just is not different from a billboard that you put outside. It's not different from that. You expense it. But when you talk about a company that sells, like an e-commerce company, for example, yes, that one you know that they are making money. Or all these hosting companies like Google Hosts, that their website is the main engine. Or a company like Google, their website is the main engine. It's directly related to that one. Is not just a static website. That one is a major project on its own. So it depends really on the purpose of that website. So Olamilekon, you tried, but you're almost there. Now let's go to staff training costs. So you send your staff abroad to go and train, to go and learn one skills. You spend a lot of money. So you are the accountants of that company. Are you going to capitalize this cost? Okay, Anthony is asking that, what do we mean when we say we are capitalizing a cost? Right, that's a very good question. So thank God you asked. So we are capitalizing means that you would add it as part of the assets. Yes, it means you are adding it as an asset. And expensing means that you are taking it to P&L. But capitalizing means that you are adding it as an asset. In this case, as an intangible asset. So it shows in the statement of financial position. So that is what we mean by that. So let's go to staff training costs. So you spent a lot of money to train your staff to get a skill, to learn how to use a software or something like that. So tell me, can we capitalize that? Can we capitalize that?
No.
No, 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 no. Sorry, again? No, yes. Okay, so Ayobami said no. And who said yes? Shidera said yes. So what's the position? What's the position? So if you can infer from the knowledge we learned in IAS 16, right? As soon as an asset is ready for use, any training that you train anyone will not qualify as you capitalizing or you adding that cost as an asset, because the asset is in itself ready. Additionally, when you train staff, that cost, that training, that skills they have gotten, right? Yes, it's beneficial to them. it will be beneficial to you, but you cannot put that in your books as an intangible asset because it does not even meet the recognition criteria for an asset. Because can you measure the benefits you will get from it? Yes, you know your training costs, which is you should expense it. Because how much benefit are you going to get? You don't know. Because the staff can leave anytime. You can decide to leave and you cannot stop them. The staff can die anytime. So that training cost in itself are expensed. Okay. So these are expense to P&L. We don't add it as part of an intangible asset that now they have a skill, so it's our asset. No, it's not your asset. They are expensed because we cannot reliably measure the future economic benefits, and we don't have control over the staff. So another key element is control, which is part of the recognition criteria anyway. We don't have control over this. You can leave anytime. Now, cryptocurrency. Cryptocurrency are like Bitcoin and all of that. So these are intangible assets because we cannot touch them. And yes, they make money, they appreciate and all of that, but they are basically an intangible asset. We usually categorize them under intangible assets. And though there is no standard for it yet, but there was an interpretation by the IFRS Interpretation Committee on how we should classify cryptocurrencies. And that is where I know that they should be classified as an intangible asset. Cryptocurrency are not cash. They are not financial assets. They do not meet that. They are not PPE because they are not a tangible item. They can be an inventory for companies that resell cryptocurrency. So that it can be an inventory to them. But properly, yes, we can capitalize them and call them an intangible asset. So if you have your company that bought cryptocurrency, yeah, you can put it as an intangible asset. Now, footballers. So most of us know these guys. We know what happened for those that are football enthusiasts. You know how much money all these clubs pay to acquire these footballers. So can we categorize this as an intangible asset? Let me hear from you guys. It's because it's a bit controversial. But the answer is quite straightforward.
Yes, sir.
Anyone that can try. Okay, you should categorize them. Okay, let me hear
Yes.
from another person. Okay, Shamaka said yes. Lekon, what do you think?
Okay, sir. I think players are not intangible assets, but they are contracts. Because the contract can be measured and is identifiable.
Okay. Okay.
Let me come in here.
Okay, Edward, come in, please.
Good afternoon, sir.
Good
For
afternoon.
footballers, the expense on footballers are in two folds. When you have the acquisition costs, let's say you buy a player £50 million from Man United to Chelsea for a 5-year contract, or as the case may be. Then you also have the wages and salaries, weekly or monthly, as the case may be. That cost of acquisition will be capitalized. Then the regular wages and salary should be expensed.
Okay. And we have somebody that understands the football ecosystem and the way it works. Okay. Good idea. Okay. Olalikon, you're trying to say something?
Yes, sir. I said I think the player himself cannot be categorized as intangible assets, but their contract, like you said, it is controversial. Like the way they are, there was one day we had a conversation on Twitter also, but from the perspective of IAS 38, since the contract can be measured and is identifiable, so I think the player's contract is the intangible asset, sir.
Okay. Nice contributions from everyone, and particularly Edward and Lekon. So, yes, footballers are human beings, and they cannot be an asset in the books of any entity. Okay, that's consistent with what Lekon said, and Edward now shared more light to it. He said there is acquisition costs. So what Lekon did not mention is that acquisition cost, see, the acquisition costs of a footballer gives the club a registration rights or a right, whatever right you want to call it, which was what Lekon was calling contract. So Lekon is perfectly correct. So it gives the club a registration rights over the footballer. So it is the registration rights, okay, that is recognized as an intangible asset over the contract period, not the footballer rights. So is that registration rights over that contract period, they can recognize that. And also, as Edward has said, they pay them wages, salaries, weekly. That is definitely an expense. Okay. Yeah. Ade Jimmy, I can see your hand. Go ahead, please.
But can we say the football clubs has control over the players the same way they can have control over the assets? Since they acquire them and they are paying them wages, they should be able to have control over the players, I guess.
No, they don't. No, they don't. So the discussion around players is totally off. Nobody can control anybody. Nobody can control anybody. So that's why we narrowed it down to a contract, a right. Yes, you might have a right. So it's just nice to focus on the registration rights. That okay, I have a registration right. Okay, I have the registration right over this footballer. So is that right that gives you to a large extent control for a certain period of time? But even we accountants are careful saying that you have control over somebody. So we narrow it to a registration right. We narrow it down to an existence of a contract. And that's why we put it as an intangible asset. It's not something you see, touch. So it has really nothing to do with the footballer. The footballer has a skill, he plays, he's making money for himself and for the club as well, because people are coming to watch. But as far as the club is concerned, what gives you money is registration rights. What makes the player plays for you is registration rights. You don't have control over the player, but you have a right on the player. So, because the player can really die anytime. I mean, a lot of things can happen to human beings. They are unpredictable. But here you have it right. Okay, so let's move away from this. So I've really spoken around everything that needs to be spoken about. Now let's solve questions. Ayobami.
Yes, sir. Good afternoon, sir.
Hi.
Yeah, I just want to ask a question, sir.
Okay.
Yeah, relating to these intangible assets. So in the financial statements of a company, for example, if we found out that one of the intangible assets that was recognized in their financials is work in progress intangible. So my question is that, is it because, okay, for example, they have, for example, the work in progress relates to a renovation of, of their building. So I want to now know, is it because they are not done with the renovation? That's why they classify it as work in progress intangible.
So,
Or what has happened?
okay, so I'm not the one that taught you that. I'm sure you must have seen that somewhere, and it's wrong. It's wrong. That practice is wrong. You see, I didn't mention anything like that because intangible assets are always um, without physical substance. Anything that has physical substance is not an intangible asset. So there's something we call capital work in progress, especially when a company is building their own structure and they are still working on it. So they call it capital work in progress. They put it in the books. As soon as they have completed the project, they classify it to the asset it belongs and all of that. So there's nothing like work in progress intangible, nothing like that. What we have in IAS 38, which I've taught you today, is research and development. So when you have a project you're working on, you can either classify it as a research cost or development cost. Research are expensed, so no argument around that. Development costs are capitalized if it meets 6 criteria, which you have also mentioned. As soon as it meets those criteria, then you put such costs, any cost you incur after the criteria are met would be capitalized and put as a development cost. So there is really nothing like work in progress intangible. It does not exist as far as IAS 38 is concerned, except if what they mean is development cost. Okay, I hope I answered your
Thank
question.
you, sir.
All right. So let's solve this question. This is a very straightforward one. It says intangible assets by their nature do not exist physically under IAS 38 intangible asset. The following information on initial cost of intangible assets were extracted from the notes to the financial statement of Igbowood, a film production company, on January 1st, 2017. So we have this information. They give us some additional information on some of them, their date of acquisition, their assessed useful life. We're told that intangible assets are to be amortized on a straight line basis. Required. Calculate the cost of the following intangible assets: market-based, customer-related, artistic-related, contract-based, technological-based. And calculate the carrying amount of the following intangible assets and see identify for internally generated intangible asset. Okay, let's solve this together. So the first one that we should calculate the cost of the following: market-based. There are 5. Let me see if I can squeeze them. Markets, customer related, artistic, Customer-based technology. Okay, so I'm sure that you would agree with me that I did not teach you this type of classification. And that's because it does not exist within IAS 38. So I really don't know where they got this type of question. I mean, it was good luck for our students that died because they all got bonus. Because even this 2018 now, yes, now, when they were even providing the solution for that die itself, they could not even agree. Everybody that provided solution provided different solution for each classification because it's judgment. It's judgment. The standard did not classify intangible asset on this. So judgment is allowed here. So whatever classification you put as words, we just give everybody 5 free marks that diet. So let's use our judgment and see if we can classify. So books and literary works, 800. Where do you think it can be here? Should it be markets? Should it be market? Should it be customer? Or should it be technology? Where? Book or artistic? 800. And I think the figures are in thousands. Should it be custom? Will it be a market-based intangible assets? Yeah, Oluwatosin.
Yeah, so it's just the heading I want to talk on. The customer base is contract base. The one you put customer base after before the technology. It should be
Oh, okay.
contract based. Yes.
Thank you. Okay. Okay, thank you.
So to me, book
So
can be markets.
markets. I think you might be right.
Artistic.
It's more of artistic. What do you think, Nina?
I think
Customer.
artistic for the books and literary works.
Yeah, it should be artistic. I mean,
Yes, it is.
so it's more of artistic than markets. What about QuickBooks and Sage? QuickBooks and Sage.
That's
Technology.
Technology.
Yeah, it should be technology. And how much is it? 950. 950. What about patents? So for patents, if you have an invention, right? Maybe you invent another way of writing. You invent something.
Good evening, sir.
Actually, I'm in classroom. Yeah, so when you invent something, you can actually go and
Patent market.
yeah, there's a ministry where you can actually go and patent it so that no other person can copy your invention. So where
Market.
should that be?
Should be market.
In markets.
Market, yeah.
Okay. Markets. Ah, do you all agree? It's not technology, but
Do think technology too. Technology or artistic.
yeah,
Patent.
that's just the challenge. So let's just put it here. What about video and motion picture films?
Technology.
Technology.
Technology. Yeah.
It's artistic. That one is That one is an art. That one is an art. It's artistic. What about franchise?
Contract.
Yeah,
Contract.
more of contracts. How much is that?
3-2.
3,002. What about pictures and photographs?
That's technology.
Artistic.
Artistic.
Yeah, it's artistic. And how much is it?
3-4.
Okay. What about order or production backlog? This is like,
Market. Order
yeah,
production. Market.
yeah. Yes, you can.
Customer
Base, sir.
customer.
Yes. And you can go for customer base too because is has to do with our customers. People have placed order that we have not delivered.
Yeah,
So
customer.
what about place? Place.
Artistic.
Market.
Artistic related.
Artistic, sir.
Is artistic for two. What about customers contracts?
Customer.
How much is it? 4,004. Why not customer? Why not contract?
Contract. I think it should be contract. Yeah.
So if you put customer, I'm not saying you are wrong because just
Costing right.
how about trademarks for customers? Trademarks for customers. How much was it? 4,600.
Let's see.
Trademarks for customers. Where would that be? Your
Market.
trademark is your design. Yeah, I think it should be market too. How about broadcasting rights? 5,000.
Right. Still market.
Broadcasting rights.
Contract.
It looks very, for me, I want to go
Contracts.
for contract. For me, I want to go for contract. What about internet?
Technology.
I think everybody agreed to that technology. And is how much?
5-4.
5,000. What about trade? Then there's trade secrets. How much is it?
It should
For
be
it?
market.
Yeah, I think it's market too. So, see, there's a lot of argument that will go. So it just meaningless arguing around issues like this that has to do with judgment and the situations happening at that time. So we just give everybody boy. So what's the total for this? 1, 2 plus 4, 6. That should be 5, 8. 5, 8 plus 4, 8. That should be 10, 6. Abi? 5, 8 plus 4, 8.
Yes, this
This should be 4,000. Okay. This one,
For
1,5 plus
artistic related, 9-1.
9,1. Okay, good. How about this? This 7, 6, 12, 6.
Artistic is 9,900.
9,900. This is 9. No, it can't be 9,900. Abi?
800 above. Calculate again, it's 9-1.
9. This 13, 17. I think it's 99. I think you should check it. Where's your calculator? I mean, I think you did not add this 800.
I forgot to add the 800.
Yeah. Okay. So what about this?
6,350.
6,350. Okay. So that's the solution A. The B, they want us to calculate carrying amount. And I already taught you that the carrying amount is cost minus accumulated depreciation. So I just need to get carrying amount for which assets they want us to do for QuickBooks, trademarks, plays, and franchise. So let me use, I think David said I should use a table. Let me listen to David at least for once. I never listened to him. So, Mawali. So, 1, 2. So,
Please, can you help us to just state the formula? Maybe, below the carrying amount.
okay. So carrying amount is cost less accumulated depreciation. In fact, if you have impairment loss, you deduct it. Accumulated impairment losses. So I want to do for how many assets? Let me insert right. I want to do for QuickBooks and Sage. QuickBooks and Sage. I want to do for trademarks. I want to do for place. And I want to do for franchise. Okay. This is it. So, what's the cost of Sage? Is 950, Abi? 950. Don't forget to put your level of rounding off. Very important. Okay. Then for trademarks is 4,600. Place is 4,200. Franchise is 3,200. So accumulated depreciation. So accumulated depreciation, to get that, we'll need the useful life of the assets. For QuickBooks, the useful life is 5 years, Abi? It's 5 years. So you'll be talking about 950 divided by 5. That will give me my depreciation per annum,
190.
190. But since you are getting accumulated, you know that which year are we? We are in December 2017. So we are trying to get carrying amounts as at December 2017. But when did we buy the assets? When did we buy this QuickBook? We bought it in 2016, 1st of January. So to get the accumulated, That means that's how many years ago did we buy it? If we bought it
We've used
January
it for 2 years.
that's 2 years.
2
Okay.
years.
16, 17. Okay, 2 years. So how much is that?
380.
I thought you said 180.
I
950
said
divided.
I said 190 before. Since we had
Okay.
for 2 years, it
Okay.
will be 380.
Okay. So that's 380. Now for the trademarks, that is 46 divided by how many years for the trademarks? Is 8 years. And we bought it January 2015. So 8 multiplied by, so we bought it in 2015. That's how many years ago? 15, 17, no,
3 years.
it's 3 years, 15, 16, 17. Then,
So
so that's how much?
1,725.
Okay. For this, for the place, is 7 years. We bought it in 2014. So this is 7. 2014. That's how many years ago?
4.
4 years. So how much are we looking at?
2,400.
2,400
400.
for the franchise. How many years is the franchise? 8 years. And we bought it in 2013. So that's how many years ago?
5
14,
years ago.
5. And how much is that?
2,000.
2,000, sir.
2,000. Okay. So let me insert below to get my carrying amount. So what's 950 minus 380 for QuickBooks?
570.
570. What is 46 minus 1725?
2,875.
2,875. What is 42 minus 24?
18.
1,800.
180. 1,800.
1,800.
What's 32 minus 2,000?
1,200.
2,200. Okay. So that is the solution for that. Then C, they said identify 4 internally generated that are prohibited in IAS. Okay, who can give? Let's get examples of internally generated intangible assets. Okay, 1. I'm with you.
Customers list.
Correct. Customers list. Number 2. Goodwill. Number 3. Brand name. Number 4.
Patent.
No, patent is not.
No publishing.
A patent is not internally generated. You buy it, you pay for it, pay to the government to get a patent. So these are examples of internally generated intangible assets. So there is another question. This one states that an extract from the non-current assets schedule of AZ Nigeria Limited at July 1st, 2019 were as follows. So they give us 3 class of assets, of non-current assets. at July 1st, 2019. So they gave us the costs of valuation. They gave us the cost of valuation. Can you continue reading, Shida?
I'm here, sir.
Continue reading.
Okay. Other relevant information. Number one, the computer software license was acquired from Microsoft Zap Incorporated, USA on July 1st, 2018, and has 10 years lifespan. In June 2020, a review of the sale of the computer software showed a very big decline in patronage. As a result of the review, estimated recovery amount of the license as at June 30th, 2020 was 33 million. 333 million. The license is amortized on a straight line basis. Additional information: the freehold property consisted of land and building, which were revalued few years ago for 395 million attributed to the land and 600 million to the building. On that date, the estimated remaining useful life of the building was 24 years. However, a second revaluation of the freehold property on July 1st, 2019, 410 million attributed to land, 560 million to the building, and 20 years of the estimated remaining useful life for building. Additional information: 3. On January 1, on January 1, an office equipment was purchased for 128 million naira, and a further 22 million naira was spent on commission and installation of the equipment. Annual depreciation is charged at the rate of 18%, one third, and on the cost, and is appropriately apportioned on time basis as situation demand. There were no disposal of non-current assets during the year to June 30th, 2020. Prepare the comparative figure statement of financial position extract of Agro Nigeria Limited as at June 30th, 2020. Show relevant notes for PPE and intangible assets. 9 months.
All right, thank you, Shida. So we're asked to prepare comparative figures, statement of financial position extracts of AZ Nigeria Limited as at June 30th, 2020. Show relevant note for PPE and intangible assets, 9 marks. So when they ask you for extracts, it means that just put the relevant figures there, figures that you can see from the question. So you're not asked to prepare a complete statement of financial position. It's just an extract. So you should not now be looking out for that. It didn't balance. It's not supposed to balance. It is an extract. Okay, just an extract. And they want you to put comparative figures. Meaning, as you are putting the figures for June 30th, 2020, you must also put for the previous year. That is June 30th, 2019. That's comparative figures. Okay, so since we know that what they want me to do is statement of financial position, start with the relevant notes. Let's start with the relevant notes. So here, there are 3 assets that they give us as at July 1st, 2019. And the year end is June 30th. That means this is the opening. These are opening figures for that year. So they give us the costs, accumulated depreciation or amortization, and carrying amounts. Okay, let's pick it one by one. So the first one is a computer software license. This is an intangible asset. They acquired it July 1st, 2018. And it has 10 years lifespan. And in June 2020, you know that June 2020 is the end of the year. That's the end of the year. A review of the sales of the computer software showed a very big decline in patronage as a result of the review. Estimated recoverable amount of the license as at June 30th, 2020 is 333 million. The license is amortized on a straight line basis. So ordinarily, I should not even do any workings here, but I'm going to teach you IAS 36 late in our second period. Then you will learn why I have to do this, show these notes, because I have to get my carrying amount as at June for this computer software, because the value of this computer software is 990. Okay. So if I get the carrying amount for the year, I will compare it with this recoverable amount. I will pick the lower, because we don't expect you to carry your assets in your books at above its recoverable amount. Since its recoverable amount is 333 million, by the time I calculate my carrying amount as at the end of June, and it is higher than these recoverable amounts, that means there is an impairment loss. I would need to impair that asset. So let's check, let's confirm. So first is for this computer software. For this computer software now, what's the cost of the computer software? The cost is 1.1 million minus accumulated depreciation, which is 1.1 million divided by the useful life, which is 10 years, times, since this is June, June 2020, and we bought it 2018, and we're in 2020. That's how many years ago? 1920? That's 2 years. So how much is that? Should be 220. So what's the carrying amount?
When it was bought in 2018, supposed to be 2018, 19, 20. Not supposed to be 3 years.
Count it again. When we bought something in 2018, July, and the year end is June 2020. So year one will end in 2019. Year two will end in 2020, June. So it's 3 years. It's not 3
The carry
years.
amount is 880, sir.
880,000. And what's the recoverable amounts given?
333.
333. So just leave it like that's your notes. So apparently it's clear that we need to measure it at 333. So that means here now we can see there's an impairment loss of how much?
There was impairment loss of 547.
Yeah, there's a 547,000 impairment loss. So this will be the new value now. We need to write it down. So the second one is freehold property. It consists of land and building which were valued few years ago for 395 and 600. 395 for land, 600 for building. I think this 395 plus 600, that is 995. Let me see. Okay, that's the 995 here. Okay. Now to that, on that date, the estimated remaining life is now 24 years. However, a second evaluation of the freehold premises happened at the beginning of the year. 410 to land, 560 to building, and 20 years as the remaining life for building. Okay, nice. So I think it's just best for me to do a separation. So let me just have land and have building with the revalued amount. Need to put my Naira job edit. As at the beginning of the year, okay, as at the beginning of the year, the land is now how much? 410 million. The building, 560 million. So what is the subsequent depreciation? You know that depreciation is like going to start over again. For the land is not depreciated. Hello, who can tell me why is land not depreciated?
Because it
Big.
it appreciates.
Don't say it. Don't say it.
So can I try?
Yeah.
Okay. Land is not being depreciated because we can't determine its useful life.
Fantastic. That's absolutely correct. Because we can't estimate its useful life. So there is no way we cannot allocate. So we cannot therefore allocate the costs because there's no useful life. We cannot allocate the costs. The same way for intangible assets also that has an indefinite useful life, they are not amortized. And the reason is that we cannot allocate the costs. So I think Lincoln was not in our classes for PPA. Depreciation is not reduction in value, it's not loss in value. So if you don't depreciate an asset, it's not because that asset appreciates. Even shipbuilding don't appreciate. We still calculate depreciation. So depreciation is not about loss in value. Go and watch the videos, go and revise our notes just so that you are up to date with our class, so that you won't continue with old knowledge. So for land, we don't depreciate, it's definitely zero. But for building, we're told that the remaining life is 20. Maybe? Yes, no, it's 20. 20 years remaining life. So how much is this?
It's 7,000.
Sorry?
27. 27,000. 27.
47,000.
27, sir.
27,000. Okay. So what's my carrying amount? This 14.
Sorry,
Sir,
sir.
that 27,000
28.
is
It's
28.
28.
28.
28. Thank you very much. So how much do we have? Is it correct? I think I'm correct. So number 3, that's talking about office equipment. So on January 1st, 2020. So yeah, so let's continue. So this third one is talking about an item of office equipment that was purchased for 128 million and a further 22 million was spent on commission and installation of the equipment. Annual depreciation is charged at the rate of 8.5% on cost and is appropriately apportioned on time basis as situation demands. There was no disposal of non-current assets during the year end. Okay, so we bought an office equipment in June for 128 million, and we spent 22 million on commission and installation. So the question is, should we capitalize or expense this 22 million? Yes, we capitalize it because it has to do with installation. Annual depreciation is charged at 18.5% and is appropriately apportioned on time basis as situation demands. So this one is saying that when you want to calculate depreciation for the year, you will need to do some proration if the asset is acquired during the year. Therefore, all these acquisitions, all these costs we incur during the year, because January 1st, 2020 is during the year, because end of the year is June. Okay, so that means in calculating depreciation on these new acquisitions, we need to prorate. We cannot give it full year depreciation, and that's the major thing for that one. So to get the value of office equipment in this case, I will get the cost of the office equipment, which is 525 as given here. Then there was additions, which is 128 plus 22, which is 150. Okay. Now total is 675. Then accumulated depreciation. So since I have this one, they didn't tell me when they bought it, so I can just work with the opening depreciation, which is 334,000. Opening depreciation is 334,000. So, and charge for the year, which is depreciation charge for the year. They charge depreciation on 18.5% per annum. What did they give us? Yeah. So ordinarily, I should just charge 18.5% on the total costs, but I cannot because 150 was bought during the year, which I have to prorate the depreciation for. So I need to calculate it separately. For this one, I will do 525, okay, directly, because it's for 12 months per annum. But for this other one, this 150, we'll need to prorate times 6/12. We need to prorate times 6/12. So can you give me figures now? What was 18.5% times 20 times 525?
9,712,500.
How about this?
$1,387,500.
Look, how are you calling this figure? I don't understand it. Just do 18.5% times 525,000. 18.5%.
97,125.
Okay. 97,125. How about this one?
13,875.
18,875.
13.
13. Okay, let's add all our depreciation together. So 334 plus this, plus this.
One. 111,000.
111,000. Okay. And then add it to this 334.
445,000.
Okay. So what's our carrying amount?
To 30,000.
230,000. Okay. So let's do our extracts. Extract of statement of financial position as at year ended 31st December 2020. To the stated June. So we want to do June 2020 and June 2019. Narrow. So computer software. And let me not start with computer software. Let me start with PPE. Land and building. In 2020, land and building should be how much? That's 230. Abi? No. What's the addition of these two? This should be 942, Abi?
Yes, sir.
Yeah, 942. And in June, how much was it in June? 895. It was 895 in June. Then office equipment. This 230. And in June was how much? 2090. It was 191. This is 191. Then can do computer software last. Computer software is 333. 333. And opening was how much?
990.
990. Okay, that's the end of that question. That's the end of that question. So there's this question that I really want you guys to try. Can easily solve it right away. I want you to try it as your assignment and please submit. Guys, a lot of you are not doing assignment. I don't know whether you don't plan writing this exam or exactly what it is. And as soon as you submit, try to follow up and ensure that you get the solution. Because I'm supposed to send you a solution for you to know whether you're right or whether you're wrong. So I'm giving you this to see if you can apply what you have learned so far. This one, it tries to apply some things. This one is apparently straightforward. Two measurement models. So cost model, so no issue around that. So try to do this. It's 12 marks. Let's see if you can get it right. And this one too. So this one is similar to this one I just solved up here. It's very similar to it. So this one wants you to prepare statement of profit or loss, statement of changes in equity, statement of financial position. These are exam standard question. And I'm also going to send you one more assignment, making three for you to practice on your own. Let's see what you can Um, let's see what you can make out of all of these practice questions. Then, so when we meet in the evening, we would see whether if you can try it between now and evening. If you have other things to do, fine, but that will be the first thing I will ask you when we meet by 8:30 today. So in addition to looking at the solution to these questions when we meet in the evening, we are also going to start and most likely finish IAS 36 on impairment of assets. So after that, I think now I have to be committed to next weekend. Let's just start group account. And whatever it takes, we need to try and finish it in February. Let me see. We can't finish it in February. So we only have 2 weeks in February. Just 1 week. Because after next weekend, the upper weekend is 1st of March. So can we finish it in 4 classes? Yes, we can if we use overtime. And considering that you guys have extra time on Sundays, so that means we'll just make some sacrifices in the next 2 weeks to finish up group account. Let's see if we can finish it in 4 periods using some few extra classes that we can get. So we'll be committed to it and see. We'll see it through because it will help you guys a lot. So that for those guys in SBL, they will have learned the foundations because in March, so that March, that you guys will be done with anything group account. So that March, then for FR, we'll be looking at some other issues, statement of cash flows, EPS, and some other standards like that for us to cover. So you guys are doing well. Let's try this before we meet in the evening. Then we would come back and show me your solutions. Okay, do you have any questions before I go?
Sir, sorry, just to confirm, there is class this evening.
Yes.
Okay. Thank you, sir.
So if I show you down, so how is your body now?
Is is getting better.
I think it's stress. You need to rest.
Thanks. Is because I use glasses, but it broke, so they are fixing it. For in the meantime, it's causing stress for my eyes.
Yeah, sorry. Just take care of yourself.
Yes. Thank you, sir.
Yeah. Yeah, I can see on the shadow.
My question is this NTAMPLs, are you saying that we should try it as an assignment?
Yes, that's it. Try it as an assignment, and we are going to look at it in the evening today. Not only end time, yeah, end time and this other guy. This will more taxing.
Why I'm asking is because of the requirement. What we're asked to do, that we should prepare financial statements, profit,
Prepared now.
but we have not been taught yet.
Sir, we do not know it all.
Can you just try something? Okay, if you don't know that
Okay,
one,
sir.
just determine the value of the assets. If that's the only one you know. I just extracted it from a standard question. So the focus is not really the statement because they didn't really give us so much information here like that. So I really want you to get the carrying amount of the assets for the 2 years. That's the major thing here. So if you can just try that, then we'll look at it when we come back. No, no, David, you're not going to get the solution. If you don't try it, no solution. If you try it, solution. If you don't try it, you don't get solution. And don't share solution with anybody. If I share solution with you, you did my assignment, I share solution with you. Don't share with anybody. If you share with anybody, you're not helping the person. So you have to do the solution. If you know you want to write this exam, you have to do all assignments, submit, then I'll give you solution. Though this one, I might actually solve it when we come back. And I might not, depending on the number of people that have done it. If it's just few people that have done it, I won't do the solution. But if I see like maybe 20 people has done it, I'll do the solution. Just show you the solution. Otherwise, no solution until you do it. Bye bye. See you later.